For the first half of this year, we expect for certain sectors there will be earnings downward revisions and the economic growth will continue to be deteriorating. However, we expect the central government or the local government will respond very quickly in order to boost infrastructure investment, loosening the property sector, and stimulate the demand on the auto and the home appliances. As a result of that, that will stabilize the outlook in Chinese equities. For 2018, we see the multiple contracted by double digit in the market. We don't expect further multiple derating in the market. However, we expect there will be certain earnings downward revisions in selective sectors going forward. So basically, if you look at the consumer demand, we look at different sectors. One is on the auto, and the other one is on the property sector, and finally will be on the food and beverage, which is more commoditized products. The property sector has weakened in the second half of last year. That will trigger a slowdown into auto and home appliance spending as well. But we still see very resilient growth on the food and beverage sector. The government already cut the salary tax last year of 2018. That will boost the disposable income by about single digit. With the stimulus on the auto sector and the home appliances and the encouragement on urbanization, we think the consumer sector will do better than the second half of last year. We think the property sector now is much better than 2015 because the inventory level on the third and fourth tier cities by the 2015 is around 35 months, 3 years level. So right now if you look at the inventory situation, it's much better than before. Right now is on average around 8 to 12 months, a normal inventory cycle. And the earnings of the listed property companies, 80 to 90% of them has been locked in. So the earnings visibility is better. And we expect after the working committee in December, we expect that will be much more loosening, from the local government level in terms of the financing, the down payment, or the lowering of the interest rate. So we expect the property sector will continue to be quite stable, especially on the first and second tier cities. We expect there will be earnings downgrade in certain sectors. We expect the property investment will slow down because the transaction in the third and fourth tier cities, if they slow down, that will affect property investment and also the commodity demand. And finally, we expect there could be some defaults, certain type of defaults in the bond market, from the local government that may trigger some volatility in the market as well. We are positive on the market because the valuation is trading at a 10-year record low level. And the other one is we expect the stimulus or the responses from both the central and the local government will be much faster and bigger than the market expected. And finally, we expect the manufacturing sector, especially on the confidence side, if the trade war got resolved, they will improve quite substantially.